let me start with a story. Actually, let me start with a riddle, guys. Um, I would like for you to guess where I was born. I was born in one country, 1983. 7 years later, when I was 7 years old, it became another country. And in 2014, when I was 30 years old, it became a third country. So can anybody guess where that location would be? Don't be shy. Don't be shy. Anybody venture to guess?
Should
Justin,
I
what do you
say?
think? No, nobody. There are a few. There are a few countries that kind of go through volatile. Okay, let me give you a hint. Orange, color orange. Okay, Ukraine. Sorry, I wasn't looking at the chat. Okay, somebody said Czechoslovakia, which could have been, but Czechoslovakia did not change in 2014. Neither did Estonia, neither did Eastern Europe. It's correct. So Michael Flight said Ukraine, and that is correct. Where in Ukraine? He cheated because I told him. Yeah. Okay. So anywhere specifically in Ukraine, the ownership, I guess, changed. So I'll Donetsk. Donetsk is actually close, but no, it's actually one of the places that was occupied by Russia. But there was a different place that was occupied by Russia in 2014 and has then changed. Crimea, Sam. Very, very good. Yeah, I'm going to have to think about the prize. I haven't thought about that. So now, why am I telling you guys this story? Um, Soviet Union was the country where I was born. And I remember when I was 7 years old, or even before, when I remember when I was 4 years old, we were standing in line for butter, right? We had very few products to choose from. And I was standing in a very, very long line with my grandparents to buy some butter. So that was one of the first memories that I have. Another memory that I have from age 7 is when I went to buy ice cream after a day at school, and the currency I was using, the bills I was using, had 7 or 8 zeros on them. And then the day after, I would go and buy ice cream again, and now the currency would have 9 or 10 zeros on them, right? And then at the end of the day, we would take the bills with a pencil and kind of just, X out the zeros to help us count how big that bill actually was, right? So why am I telling you that? Why am I telling you this? In my mind, the Soviet Union was the most centralized government, the most centralized economy, the centralized level of power that I've ever experienced in my life. And I saw it with my own eyes, right? And when I was 7 years old, Soviet Union became Ukraine. All of a sudden, we had a bunch of opportunities. We had to learn a completely new way to create economies. A lot of people started doing businesses. A lot of people started creating new economic models that we were learning from the West. So that's kind of a prelude to what I'm going to be talking to you guys today. And I need to share my screen, Stefani, to give me that permission. I'm going to be talking
Sure.
to you today about Finance 2.0 and basically what I envision for this new economic reality that we're going to see today. I think from that experience of when I was 7 years old to now I'm at 37 years old, right? It's 30 years. I've seen the movement, at least in my life, from a completely centralized type of economic reality to a semi-centralized reality when I moved to the United States and I saw a completely different kind of almost freehand economy, right? But yet managed by the central bank, where there is an authority working on different things. To right now, what we're seeing, a lot of shared economies, right? We kind of moved into this decade of shared economies from 2010 to 2020. We have Facebook, we have Airbnb, we have Uber. We moved into the decade of shared economies all through the 2020. And what's going to happen now from 2020 and upward is basically the era of decentralized finance. Now, when did we really realize what decentralized finance really is. When does an average person hear on the news something that is basically talking about decentralized finance and may not even realize about it? Well, the first thing that I think people heard in 2020 was Facebook's currency. That made the news, right? Libra coin, and that the government wasn't happy about it. So in most people, that's when they meant decentralized finance. However, decentralized finance actually appeared on the scene a lot before, right? So let's talk about what decentralized finance is, and let's talk about tokenization and what tokenization is, and how tokenization is playing a role of a bridge to finance 2.0 or decentralized finance. So what is traditional finance? Well, in my mind, when I was born until 7 years old, it was just basically the central government, right? The central government with a central bank. There's only one state bank back in the day, right? When I was a child. Now, if you're looking at centralized finance today, you have, of course, a lot of different institutions, a lot of banks, and you have like the central bank kind of governing the relationship of where the economy is going. Yet the banks control people's assets. And the central banks, of course, print out money. Not quite literally. Well, they literally print out money, but they have control over the money supply, right? Through various economic measures. That's centralized finance. And then we have decentralized or open finance. And that's in very stark contrast to the centralized, right? So where individual is the sole custodian of assets. You can hold your own assets. You can be your own bank, right? Very stark contrast to what I experienced when I grew up, right? Now you have open source instruments, financial instruments, or you have third parties creating financial instruments like Solid Block, for example. The company that I co-founded creates real estate backed tokenized securities, which we're going to talk about later. So you can have third parties creating financial instruments, creating securities that almost everybody has access to and almost everybody can trade. That's decentralized finance. Or we have traditional and newly tokenized assets, like I described. You can actually allow stocks, to be traded outside of the brokerages. We're going to talk about certain examples like GameStop, right? When it wasn't traded on Robinhood, a lot of people tried to trade it, right, on other tokenized type of markets, right? And then you have a full transparency of the processes, right? You have a full transparency of issuance of new financial products, repayments, loans, collateral. Everything is out there for individuals to see, and you can use blockchain to make this transparency exist. So let's review the difference between CFI, centralized finance, and DeFi. In a traditional financial system, you have individuals that are connected with different institutions, right? And the institutions could actually have several. If you're living, if I'm trying to send Stefan $10 using a bank and he's in the US, the money is gonna go through 5-6 different banks, right? So, and payment companies possibly in between. Even if I'm sending it through PayPal, it will possibly go through various things in between, right? And that's a centralized system, and we're paying for all of that, right? And in a decentralized financial system, we have the sender and the receiver, and then we have a computer network inside, and there is some sort of an operating and management and governance mechanism that determines different services, different assets within that system. But the idea is to decentralize the system in order to, number one, reduce fees, number two, create new products, number three, increase transparency, and number four, create much more opportunities, right, in the market for people who don't have access to banks, loans, credit, credit history, education, brokerage accounts because of lack of, address or different things, right? So this is a much more open and much more fair type of system where people can create wealth, where they can attain financial freedom, right? Now, Stefan, I'm going to ask you, if I can ask you for a favor. I'm not going to check the chat or Q&A. So if you see there is a question, just let me know, okay?
Absolutely.
All right, great. Okay, fantastic. So I mentioned GameStop. GameStop is a really, really cool use case. How many of you here have not heard of of the whole recent set of events where GameStop and other stocks were traded, bought on Robinhood? And do I need to tell the story? Okay, I'm just going to tell you. I'm just going to tell the story very quickly. One of the hedge funds on Wall Street decided to short the stock, and because obviously in COVID, GameStop was suffering, like many other shops, physical shops. People are not shopping. Obviously, the stock is expected to go down, and shorting the stock creates tremendous income, right? Creates tremendous income for the hedge fund. Individual users and GameStop fans didn't like that, and they formed a big group on Reddit, or it might have been an existing group that collectively decided to go and start investing in the stock, simultaneously raising the price. Hedge fund loses money. They realize that there is a huge power in individuals getting together and creating kind of their own hedge fund, right? So kind of decentralized hedge fund, pretty cool, right? So actually completely decentralized, because it's really consisting of individuals, sitting around Reddit. And actually a lot of people are unemployed right now because of COVID, right? So what happened afterwards is that the same group realized, we're going to start rallying the stocks. We're going to pick up, the stocks that are the most unfortunate, like airlines, movie theaters, and we're just going to rally them up. And then what happened? Robinhood had to close down their trading. They were saying because of lack of liquidity, and, unfortunate regulation processes that require kind of waiting for clearance for 2 days. So Robinhood had to borrow a lot of money. But bottom line is that possibly they wouldn't have done it if the institutions were in place of regular individuals, right? So what we learned from this story is that in centralized finance, rules only apply if institutionals win. That was kind of the aftertaste that people got, right? And they can be broken, suspended, or revised with minimal consequences. And we've seen that in the crisis of 2008, right? I'm going to look in the chat here. Wall Street bets on Reddit. Okay, cool. And who's writing this? David. It seems like, okay, cool. You wrote the story. So feel free, by the way, to jump in and add to the story.
Yeah, just a question before by David, actually. So he's mentioning the sort of banks know your customer requirements, to filter anti-money laundering, versus DeFi, where there's no KYC, which is an issue for governments and FinCEN requirements. So what would be your comment on that side?
Oh, that's a fantastic question. Okay, so they made money on GME. That's great. It's a fantastic question. So DeFi comes in different shape and form. Okay, as my argument here is that DeFi is much bigger than what we see in what's called DeFi exchanges like Uniswap, and we'll go a little bit in depth through that. In my mind, DeFi is more of decentralized finance services. In a way, Solid Block is semi-DeFi. It's in between the two. And we're creating a marketplace where it's going to be completely decentralized, right? So in many DeFi exchanges, there is no KYC, know your customer. So people come and they don't have to register to trade. That's a totally different industry that is a part of DeFi, what I call DeFi overall. So what I see in the future is that there will be similar opportunities in DeFi trading of crypto products, traditional products, securitized products that will still require KYC and full compliance. Why? Because we live in a centralized world still, and we need outlets to collect money. We need outlets to manage and pay taxes and so on and so forth, right? So in a year or two, I envision there will be marketplaces that are decentralized, yet requiring a full KYC disclosure. So that was a quick detour, and hopefully didn't confuse anybody here. But we'll go through these things. Robinhood, as I mentioned, Robinhood had to halt trading, and their CEO went on what's called a Clubhouse. It's a new app where people go and communicate nowadays, and basically was saying that the reason we did this is because we need real-time settlement. If we had real-time settlement, we wouldn't have to halt the trading. And then went on in depth. We wrote I think a blog on Medium saying how much we need technology that will do real-time settlement, which means when I buy stocks, or a big chunk of stocks from a company, from another buyer, there's actually 2 days for money to be reflected in another bank account. So blockchain is a tool that allows for the settlement to create, for the settlement to occur in real time or near real time. Now, let me just run through very quickly what blockchain is, right? Let's say, again, that example, I need to send Stefan $10. I can send it through a centralized system, like a bank, Venmo, PayPal, all of those are centralized. And only a centralized system until 2010, when Bitcoin came about, centralized system is able to subtract $10 from my account, whether it's a bank or PayPal, and add $10 to Stefan's account, right? Once they clarify, right? The second transacting party has to clarify that the first transacting party actually took $10 off, right? There needs to be kind of a verification system. So obviously they don't call them on the phone, but they have ways to corroborate. Now, it's obviously very costly and a long process. So instead, when we have a decentralized system, like based on blockchain, like Bitcoin, right? Like Bitcoin is based on blockchain. And actually, blockchain was created for decentralized currencies to exist, for cryptocurrencies, cryptographic currencies. The way it works is when I want to send $10 to Stefan in Bitcoin or in any other currency, what will happen is that there is a decentralized network of computers globally that are tasked with double checking and making sure that my balance indeed is reduced and Stefan's balance indeed is increased. And then the transaction is valid. So there's a mechanism of consensus among these computers. And basically that's how we are able to ensure that there's no double accounting. The $10 didn't stay in my account and didn't appear in Stefan's account. So that's basically what blockchain is, right? It's good for transfers of information, money, and other assets, right? Like real estate, for example, between different parties. So that's blockchain, right? Cryptocurrencies, right? So yes.
Just a quick question, sorry, may I interject like on the transactions part?
Yes.
So just let's say genuine question is like a retail cryptocurrency customer,
yeah,
for example. So I would, like a week ago, I transfer out of my account and I transfer the stable coin, like USD stable coin, right?
Yeah.
And
yeah.
that's news comes out simultaneously. News comes out on
Tether.
On that stable coin. They had like some kind of lawsuit against them, or something like that.
Bitfinex.
Yep, yeah, not super groundbreaking news, but still impacting. And the respective exchange, and I don't need to say the name, the respective exchange, they actually, they sort of lock their respective wallet, right? They're not accepting any transactions.
Right.
So then I kind of like send like an amount of money, and then it's just kind of hanging out. I have sent it on one side, it's subtracted, and just hanging out in the air, and there's no record of the transaction on the other side. It's recorded on the blockchain, so I'm kind of, okay, maybe that will be your kind of argument. one should be calm about it. But on the other side, basically it's hanging, like this, and it does not get accepted.
They block the transaction, right?
Yeah, they sort of, they close their wallets, no nonsense. They actually send the transfer, and everything was okay afterwards, but just giving you one example. So let's say send the transfer.
Absolutely.
Prior to the wallet being blocked. So it's very like, I personally, I'm just saying as a customer, when I send any transaction, I always feel like I don't know if it's gonna get there.
You don't know what's gonna happen, and it's unfortunate. I love this example.
And sorry, I'm just to finish. Sorry, just and the second thing is, if you was this huge uncertainty of typing correctly. I mean, obviously you copy paste the address if you're, typing it correctly. What if you make a mistake? Then you're done. Or what if it's like repo or something and there's a tag, like you have the address and then there's a tag element, and that's like crazy, right? You don't put in the tag and you lose like 50K or something. It's ridiculous. I know this part is, for me, is very strange. It's not a conceptual thing. It's a very silly kind of customer comment, Like,
100%.
There's an explanation about it behind on the blockchain technology, etc., and that I don't understand myself. And I do check like on the Ethereum blockchain where they're recording stuff there. That's some kind of consolation in such cases. But still, just like sort of a layman's question.
No, it's actually a great question, and it's very simple. I'll answer the first one. Crypto payment technology is still in diapers. Blockchain technology is very young. It's only 11 years old, right? It's preteen. So just like when we started in banking, or just like people started on the internet, and there are all these problems, security issues, and things like that appeared. It's the same thing right now with blockchain technology. In terms of crypto payments, there are some great apps that you can use where you don't have to enter wallet IDs. That's actually kind of an old school way of transferring money. And it's insane that you have to enter like a long number that you have to keep in the safe, and so on and so forth. So there are some nice user experience in apps where you can be sending money like you do on PayPal and Venmo, for example, but on the back end, it's decentralized. In terms of the first story, the Tether and USDT, it's unfortunate because mainly USDT presented itself as more or less decentralized company, where it really is not. And it, there was a tax evasion case, and there was a case where they didn't. This is basically, I don't want to get into too much of a difficult explanation that many people here may not understand, but basically they promised to back their cryptocurrency 1-to-1 with US dollar, and they didn't do that. So the Attorney General of New York actually got on their case, and the state sued them, and they reached some agreement and mediation. And the Attorney General came out yesterday and said cryptocurrency is super dangerous and super risky, so where people can lose all their money. Bitcoin didn't care so much. Apparently, the market didn't care so much about that. But at the end of the day, what I would say, trust decentralized currencies, Bitcoin and Ethereum. Like I frankly did not trust most stable coins at this time. That's the answer. If you send somebody Bitcoin, it would get there. If you send somebody Ethereum, it would get there.
But if you mistype the address, then it would not.
If you mistype the address, it's going to get to it. And then it's gone. So one of my good friends has a startup company that has a reversible Bitcoin transaction mechanism, for example. So like I said, the technology is in diapers right now. It will improve, and it will make everybody's lives better. So that's my sincere belief. So Elon Musk made history when he placed his full support behind Bitcoin, right? He did it in the Clubhouse stream, which, as somebody pointed out here, is great for crypto and blockchain. Many new technologies with early adopters. Also, he, caused Bitcoin frenzy when they bought a bunch of Bitcoin with Tesla. And so anyway, crypto is becoming fast new frontier in decentralized financial platforms and markets. Market cap is really high. Definitely, if you're not in crypto yet, just kind of go and buy a little bit, even though it's very high right now. But I'm just saying, just dip your toe in and understand how to do this. You can get, well, sorry, I'm not a financial advisor, so don't treat don't treat anything I say here as a financial advice. But kind of as a crypto enthusiast, I'm saying, yeah, just gotta own some Bitcoin, 0.0001, let's say, and you can talk about it at the next party. DeFi market cap. Beginning of 2020, capital in DeFi products reached 1 billion. And in February 2021, it's approaching 30 billion. So you can see this curve of DeFi products is going nuts. So there's some stable coins out there, right? So decentralized lending protocols using cryptocurrency as collaterals and lending against those collaterals. Now, Solid Block is working with Maker to place real world assets like real estate as a collateral. So that's kind of cool. You mentioned DeFi. Somebody mentioned here the DeFi industry, the problematic one from the KYC perspective. This is an example. It's an exchange which allows people to put their crypto and to trade like crypto pairs. It's a little complicated, but if you're interested to talk to me about it privately, and I'll be happy to. So these are stable coins. Like this one is the problematic stable coin that Stefan was talking about. So very quickly, why is a good time to tokenize right now, and what is tokenization essentially, right? And why do I consider it as a bridge to the DeFi world? Right now, there is a very high demand for liquidity for various reasons. Number one, the world is down in the dumps, and blood is in the streets. It's a great time to invest. We need some money to invest, right? Second, regulation is actually very welcoming of various things. Number one, just about 8 years ago, actually maybe it was in 2012, there was what's called the Jobs Act, which encouraged SMEs, small and medium enterprises, and the way one of the things that the Jobs Act did was to allow trading of private assets by individuals, right? So if we now have a private real estate asset or a private company, we can issue an offering to sophisticated investors, heavily advertise it, have those people buy a part of the offering, and then trade it amongst themselves, right? Even trade it on specialized exchanges. So that's what was new, right? This is very new. This is about 8 years old, right? 9 years old at this point. And it's a competition for IPOs, for small market stocks, right? If you want to raise 20, 5, 10, 20, $30 million, likely you're not going to go for an IPO. Instead, what you'll do is you'll go for an STO, security token offering. You'll issue these securities on the blockchain, and that will enable you to trade efficiently. You can issue the securities without the blockchain as well, but that will enable you to trade not as efficiently with intermediaries who can hold stocks on your behalf, who can transfer fiat on your behalf. It's very, very complex, and blockchain makes these transfers much easier, as I mentioned in the initial example. So yes, blockchain is the technology that lets us do these things much more efficiently. I talked about COVID, which just changed everything and put sharing economy into the stratosphere. Everything is done online. You don't need to own an office. You don't need to own a car. You don't need to own, even identity is decentralized right now. Instead of giving somebody like a full ID and a printout of everything, you can actually, there are now apps that let you give a part of your identity to different government agencies and companies. So what does tokenization do? Actually, what is tokenization? Maybe let's do that. Tokenization is two things: securitization and digitization. Number one, you securitize an asset. When you tokenize an asset, you securitize. What does it mean to securitize? It means to divide it into shares that you sell to investors. You don't sell a full building. You don't sell a full apartment. Instead, you divide it into shares, right? These are called securities. So that's step one. Step two is instead of recording the ownership when somebody buys securities, instead of recording it in some Excel database or whatever SQL database online, instead of putting it in a legal office somewhere, we're just recording it on the blockchain, which is secure, immutable, and safe. And when you record things on the blockchain, in addition to it being secure, immutable, and safe, you can also trade easily. Remember, we don't need crazy intermediaries. We don't need agents to hold the shares on both sides. You can trade this easily, right, through licensed exchanges. So that's why we securitize and digitize, and that means tokenize, right? So digital securities are also called security tokens, and like I said, they can be traded on crypto exchanges that are licensed or alternative trading systems, and now also stock exchanges. We have stock exchanges that allow trading of security tokens. Now I have a question here from David. How would one tell the difference between a standard ERC20 and an STO? So ERC20 is basic. Okay, so Bitcoin was the first blockchain that, Bitcoin was the first cryptocurrency and the first blockchain, right? So there's Bitcoin blockchain, Bitcoin cryptocurrency, that kind of paved the way for others. The second major currency was Ethereum, and Ethereum was revolutionary in the way that they realized we can build other stuff on the blockchain. We don't only need to use it to just kind of send money to each other. We can build other applications because blockchain is useful for transfer of a variety of things. So then they created a standard called ERC20. That was their first standard, and they said, "Go developers, we're a platform." Now, kind of like what iOS did for iPhone, and kind of like Google did, obviously, for Google Play and so on, right? A platform that said, "Go developers, start developing stuff for our platform that people can use." But instead of having a centralized app store like iOS and Android has, they said, "It's decentralized. Just do whatever you want. Here's our blockchain. Go take it, build it, not for free. Like, you can build it for free. You can develop it, but you need gas to run it." Right. So and kind of gas is how they make money, because you need gas to operate the blockchain, because obviously there's electricity to operate the blockchain and so on. It can be running for free. So ERC20 is not related to an STO. I mean, there's no, it's kind of like ERC20 is just a standard and an application, right? STO, security token offering, can use any blockchain. It can use Ethereum, it can use Bitcoin, it can use EOS, whatever you want. Now, if you're using Ethereum like Solid Block, you will use ERC20. There are other standards that you can use also in security token, other type of numbers, 1404, things like that, or 1440. But you can use ERC20 to issue a token because you're building an application on the blockchain. You're building a smart contract, and we'll get into that in some other lecture. And also the question here is super advanced, and I don't have time, unfortunately, to get into NFTs. By the way, that's a super interesting topic. I did a podcast today with an artist and blockchain enthusiast. Specifically, we talked for a long time about NFTs, and I'll drop you guys a link to my podcast. So check out in about a week. We're going to post the podcast. You can learn about NFTs. And I'll get into some other questions here in a little bit. So indeed, we are using ERC20, and our preferred blockchain today is Ethereum because it's well represented among exchanges. It's easy for us to integrate. So tokenization benefits. Some people here are, of course, advanced in tokenization, but just to reiterate, things that maybe are not so obvious. Tokenization makes assets more attractive to investors because they have liquidity now. And as a result, the asset itself may become more valuable and attract global investors. So you have avenues for people to invest globally because transactions are made much easier, right? So these are some benefits of tokenized offerings, right? So to fast forward, Just want to show you this
Well,
slide
yeah,
before
so
we,
just on the
yeah,
liquidity, I would say probably just accept value investors, right? In that case,
sorry,
which except I would say I agree on your comment on
yeah,
liquidity, but probably with the exception of value
value
investors,
investors.
which which may sort of reduce in their interest because they would say, okay, I cannot buy a deal anymore. It's now liquid. It's so efficient. I'm paying the
You
market
mean
price.
reducing the
It's another,
illiquidity premium? Yeah.
yeah,
Okay,
exactly.
so there is an argument there, of course, that some assets are in the market as it is today because of asymmetric information and because some funds are prepared to hold things for a long time. There is some sort of an illiquidity premium. However, through my research, liquidity premium, which can be as high as 30%, is actually higher than the illiquidity premium right now in the market. So we don't have enough data and enough information, but I'm waiting for us to get to that point so that we can do proper research. So I think through that, benefits of liquidity, well, not only through that, let me show you this graph and then you'll understand the benefits of liquidity. Or maybe I'll show you an example instead of this graph because maybe it's too complex. Let me show you this example of the St. Regis project. It was the first commercial tokenization that the world has seen. It was done by us, by Solid Block, where we raised $18 million, where they raised $18 million on the Solid Block platform. Basically, very, very quickly and efficiently from people all over the world. And the cool thing about this project is that as soon as they got listed on T0, immediately they started trading at a 30% premium. That's number one. Number two, let's calculate what was the annual return for investors, right? Normally, they would have to hold this security for 6, 7, 10 years. It's a hotel. God knows when it's going to get refinanced or sold to another buyer, right? So they might actually have to wait for a while. And they likely, chances are that they would earn 30% premium over 6 or 7 years, or probably a little higher. Maybe they'll earn 50, 70%. But comparing with that, in 2 years or a year and a half, they were able to earn 30% premium plus dividends and that they received, right? So at the end of the day, when you shorten the investment period, your internal rate of return, or basically your ROI, is much higher. Okay. There was a question here. What is the question? Need to be able to deposit the tokenized assets so it can be borrowed against and thus needs to be widely recognized. Absolutely. So again, these are very, very advanced questions, David. Seems like we have a conversation, a follow-up conversation due. So what I want to actually show you guys related to this question is the future. And that's basically how I want to finish talking all by myself and have other people join in. So real estate is a huge market, actually. Where's the market slide? $300 trillion worth of real estate. Only 1% is tradable right now, which is public Reits, right? It's become, this whole industry has become extremely centralized, extremely institutionalized, and inaccessible to people. So now we have an opportunity for people to join either on the primary or the secondary level. We're diversifying investor base, creating new business models. Now, what else is the future? Look at the future here. Imagine your regular banking services. You now, for the first time, imagine you go to the bank for the first time. You no longer have your money stuck under a mattress or in a pillow somewhere. And so your money is now stored in a bank. Now, the banks are very smart. They started creating additional services, right? You can get loans, you can invest in assets, you can get a credit card, you can do payments that are digital, all these new business models that were enabled by a bank, right? By virtually having somebody store your money. Now, imagine the services you can have when real estate comes in a digital form, right? You can, number one, collateralize that and get loans against it. So that That's what David is referring to here, and we are doing that at Solid Block. You can actually now connect and do very efficient exchanges. You can connect to DeFi sources. You can create index funds and derivatives. So kind of mimic traditional finance, but also I'm wondering what the new things are going to be, right? What the new products are going to be in the market, right? So in terms of the Oracle, it's against very, very advanced. I'll be happy to talk to you about it. So the T0 STO itself, I'm not sure what where the T0 did the STO. I think it might have been on Tezos because they're good partners, these two companies. So the last thought I'm leaving you guys with is that tokenization really connects centralized assets to DeFi, because right now, most physical assets ownership is recorded in centralized databases. Tokenization allows to partially decentralize the ownership, bringing assets to DeFi. And for full decentralization, we need governance protocol to determine real-life asset transfers. That's something that we are actually building in 2022, a place where where a group of asset managers and banks and whoever else wants to join the system to govern will be able to pick assets that get to tokenize, pick assets that will go on the solid, on what we call solid coin platform, and assets that get financed or underwritten. So we're working to decentralize that as well. So I'm opening this up to discussion, to questions. You know, by the way, you can unmute yourselves and just talk freely. Thank you.
Great. Awesome stuff.
Cool. And I'm sorry it was so fast and, you know, a lot of information packed in. You know, feel free to ask. There's a question here. How is management of the STO properties being handled? There is traditional management and there is digital asset management. Digital asset management is managed by Solid Block. And then we have a traditional real estate partner always, you know, doing the management of the asset itself. It could be done better. And we are working on decentralizing the governance as well. Right now, there's always an administrator on the property, kind of a third party that will come in if needed and liquidate the property. That's one of the things that we established as a standard in Solid Block. There is no regulation, there is no standard. We're doing completely new things, but because we come from this kind of traditional finance, traditional real estate background, we're working to provide, you know, the most optimal structure as possible. Let's see. I basically see STOs being an alternate holding method to Reits. So that's, I would argue with that because a REIT ultimately is a tax structure. What I think you mean here, David, is and kind of a collection of assets, right? There are public REITs and there are private REITs that kind of are index funds. So we're going to create index funds that are a collection of tokens and allow individuals to actually create their own index funds, right? And make those compliant and sellable to other people. So that would be very similar to the REITs, all right? Let's see.
Yeah, so just a quick question. And
yes.
So like conceptually, it's so like great, but what are some of the current challenges in terms of tokenizing, let's say, a piece of real estate? Because I think I heard it gets placed in an SPV and things like that. Does it become genuine tokenization in the context of the way it gets implemented then? Or is it sort of, you know, currently, or that's still some hurdles, there's still some hurdles to overcome?
So in terms of hurdles, it's not really hurdles. It's more of a constraints. Well, I don't know what the difference is between the two words, but there's always regulatory limitations and in the way things can be done in the real world. But on the other hand, you want to, number one, not to overwhelm the public and present them with acceptable solutions. And also, because we live in the real world, we have to comply with rules and regulations, right? So the way we do an STO, actually, I kind of skipped over those slides. So let's go back to that for a second. Okay, so when we securitize an asset, the easiest way to securitize an asset is to create an SPV, basically a new holding structure, which has zero history, All right, legally is the cleanest way to do this is to create a new SPV that will have an agreement with the asset to acquire either fully or a part of that asset once the money comes in, right? So there is an agreement to do that. Ideally, in the future, we would want that agreement to be a smart contract. A smart contract is a blockchain application that ensures that the transaction goes through on both ends, right? The money, which is gone through a crypto based mechanism, for example, but also the change in the title or change in the ownership of the company. Where is this possible? It's possible in countries like Georgia and Estonia, you know, where you have blockchain based databases for real estate and for companies as well. So you can change ownership on the blockchain as well. So right now, this is governed by real world contracts, right? I sign a contract that I'm going to buy an asset from you, right? So that's what the setup vehicle stage is. We're setting up the stage for an STO. Now, then there is investor onboarding. Investors that come in have to undergo know your customer, anti-money laundering. Then we create the tokens. We create the smart contract. We create a blockchain-based program that says basically that once you transfer the money under a certain valuation, you know, let's say $1 per token, then you're going to own, once you transfer the money, you're going to own a certain part of this security, right? And a certain number of securities. So that's a smart contract. So once we finish the raise, everybody automatically gets a cut. Everybody automatically gets their securities. So that's a smart contract. These are the tokens, right? So that's the primary offering. It's done. We raised the money. People got their tokens. The next stage is to put these tokens on the secondary market. And the secondary market are these ATSs, exchanges, and so on. Sometimes there is a lockup through regulation in the US, for example. There's a 1-year lockup in between the primary and the secondary. So in 1 year, we'll list the tokens on an exchange, and then the owners of the tokens will be able to trade, right? So that's the SPV setup. And right now there is no better way to do this, because in most countries you cannot tokenize real estate directly. In those that do have title on the blockchain, this could be possible in the future. Maybe we're not going to have to do this SPV. And by the way, SPV is a huge, huge headache. It costs a lot of money. There are a lot of tax implications. And frankly, it would have been much easier to create some sort of an entity on the blockchain and that represents ownership of that asset.
Hey there. So can I,
Yeah.
do you mind if I talk?
Yeah, no, of course not.
Okay, so a question. So one of the things I see this working great for personal assets and for property management companies that actually own the assets that they're managing, or for your own assets that you own free and clear, because be able to create an STO of that and be able to borrow against that and potentially in DeFi would be awesome. The issues that I see in where I like REITs and I don't see this necessarily has STOs handle this is because when you buy the STO, you're buying the underlying asset. When I'm buying a REIT, I'm investing in a company that basically is managing a portfolio and dealing with the management of that portfolio.
True.
And you're getting the returns from that. The problem with an STO is if you're not actually investing in the company who's managing it, and you're only buying the asset, you're relying on some other third party to then manage that asset for you, unless you're actually taking care of your own property. And then there's always a risk with that as to how they manage their fees that they're managing. And I see an issue with that. And that's why it's great if it's your own property. I just, the management aspect is where my biggest concern is on STOs versus REITs.
Okay, so the STO is basically like a single asset REIT. It could also be multiple asset. We have some tokenized funds, for example, at Solid Block. We have a fund that invests in medical facilities that are fully managed by whatever asset manager they have, right? So to your question about asset managers, when you invest in an STO, there is a private placement memorandum that clearly outlines who is the asset manager on the property, what are their fees, what is their philosophy, what is their mandate. So it really, there is really no difference in terms of that, and let's say a new REIT that you don't know, right? why would you invest in a certain REIT? Because you heard that it gives a good return and that you trust the managers that they made somebody else money, right? So it's the same thing you can replicate with a real estate asset, single asset. How? You heard about a specific sponsor that had, made money for their investors. They hire good asset managers or they manage the assets themselves. So there is still an element of trust, but it exists also in the REIT.
Yeah. Well, if it gets to a point where you can actually take your STO and then transfer it to another property manager, I can see that, because then there's a market for property management and who's managing the property best. And then moving your STO around, and that would be kind of cool. It'd be interesting to see what direction it goes. I mean, like I've invested a good number of REITs just because they provide a good return. But yeah, it's you're not typically going to be managing your own properties when you invest in a REIT, obviously. And so I would assume the same would go for STOs. Eventually it'd be nice if we just have our mortgages in,
We're working with that as well, especially for the affordable and the workforce housing initiatives, where people can buy the houses where they live and pay rent partially. It solves a lot of people's problems with respect to mortgages and paying the bank twice the price of your apartment, for example, over time. So absolutely, this is a very interesting conversation that we can have.
And you're doing this in the United States now? Because I heard realty was for a long time was only being able to cater to outside the United States.
Yeah, we do this in the U.S.
You do this in the U.S.
Also, yeah, I think they're also doing Reg D 506C, focusing on single family. We focus on larger assets, 5 million and up.
Yeah. Okay. So usually accredited investors and all that. So,
yes. Cool. So I got a few other questions here. Ethereum gas fees are crazy right now. How are you working with those issues? Well, we are looking also for alternatives, either to Ethereum blockchain because of that as a backup. So it isn't indeed pretty expensive right now. We're still not in the trading phase, and we're going to get there in about a year, where we'll do over-the-counter trading for the assets we're issuing right now. So definitely that's going to need to be addressed. How liquid are the secondary markets for tokens? Right now, we have a healthy level of liquidity for St. Regis Aspen Coin, for example. 5 to 10% of its market cap is traded monthly. And it's a textbook use case of tokenization, because initially there were 22 investors on the deal. Right as it was listed, it turned into 200 very quickly within weeks. And now there are over 800 investors. So you can see liquidity is growing. And there are more and more exchanges out there, market makers and other players. So I have no doubt then that this time next year, there's going to be a really, really good level of liquidity.
Are those traded on a place that we can see?
Yeah, T0 is one. There is a great exchange coming up, a public company actually called INX. They're launching in April. We're working with Merge in Seychelles. There are quite a few ATSs right now, new ATSs in the US that popped up, like Texture Capital, Atlas One, and just great companies all around, also in Asia. So we'll see more and more of this, and a lot of traditional exchanges are also on board, so that are going to start offering securitized offerings. Yeah, and
excuse me. Yeah. Thank you very much for your time today. Fascinating.
Yeah, absolutely. I appreciate it. So 506B offering, can we do 506B? Technically, yes. We could, there's a difference, there in terms of securities, as I mentioned, the Jobs Act enabled a new regulation that's called Reg D 506C, which enables basically marketing to anybody who's an accredited investor in the United States. And I think 506B doesn't allow marketing, so but allows some private investors and non-accredited investors to participate. Technically, there is no reason why not to do this. We don't do this just because we want to take advantage of the marketing.
So to interject at this, the 506B, 506C question.
Yeah.
So like, how do you see, let's say in the short to intermediate term, tokenization affecting and sort of helping real estate syndicators, because there are a few people interested in that in our group. So I want to make sure they hear that.
So for real estate syndication on the blockchain helps diversify client base, provides additional value to investors in terms of liquidity, increases the value of the asset itself. Imagine an asset joining a public REIT, it increases the value of the asset. So the same thing will happen with tokenization. You'll have a vehicle set up for, a long-term vehicle to set up to make money. I think that in 5 years, all of the majority of real estate is going to be liquid. So I would get on board right now.
So, but in the let's say in the short term, would you say it would provide more value at the beginning stage during capital raising for a deal, or would it be more acquire the deal the traditional way and then tokenize it and try to sell it at like your liquidity premium argument?
So what I would say is this, tokenization ideally will provide a better method of underwriting. So if you have an asset that you want to acquire, and it doesn't matter if it's an existing asset to be leveraged or an asset for acquisition, you should have around 10 to 20 investors, whether they're institutional or high net worth individuals, that will come into the deal with you. Now, why would they come into the deal with you? Because a year later they can exit, right? So they know that you are reliable as a real estate developer or a sponsor, that you pick great deals, they're not going to flop. So in 1 year, they expect to make money and exit and then get a new deal with you or with whoever else, right? So this is something that you're going to see a new rhetoric in tokenization very, very soon. And so those that have an existing investor base, even if it's small, kind of these few trusted investors, are going to win at the game of tokenization, right? And then in the secondary market, that's when the real democratization happens, right? It's still not a public product, but anybody can buy it. Retail, accredited, institutional, and so on. Yeah, I have another question here, and I think I have to run because I have meetings. And I'm sure you guys have also stuff to do. So, but I'm available, and you can always contact me on a variety of social media channels, even WhatsApp me, I'd be happy to talk. The last question here is, what about the idea of fundraising for an STO to acquire property? No problem. As long as you have skin in the game, meaning you are putting some of the money in yourself, as long as you have investors that trust you, trust your track record, there's no problem with that. So can we finish on that note?
Great. Great. Thank you so much. This was so informative. Yeah, I really appreciate it.
Yeah, absolutely. I appreciate the opportunity. And yeah, like I said, I'm happy to talk to everybody here. Email me and we'll set up. Thank you so much.
Thank you.
Thanks. Have a great day.
You too.
Bye.
Thank you.
Thanks, everyone. Bye-bye.